Welcome to The Explainer. Today we're going to put on our detective hats. Our case? To look past the obvious price chart and uncover the hidden clues that tell us what a market is really thinking.
So, here's our game plan. We're going to start with the most obvious piece of evidence, price, but we'll see pretty quick why it's just not enough. Then, we'll bring in our two star witnesses, volume and open interest, to really build our case.
Okay, let's start at the scene of the crime, the price chart. This thing is great at telling us what happened, but it totally leaves out the most important part of the mystery, the why.
So you see a chart like this, right? The price is climbing, everything looks fantastic. But how do you really know if there's any muscle behind this move? Is it a powerful trend that's got legs, or is it just a fragile rally that's going to crumble at the first sign of trouble?
Well, to answer that, you gotta look deeper. See, the pros, they almost never look at price in a vacuum. They use a three-dimensional approach because price is just one piece of a much, much bigger puzzle.
And that brings us to our first major clue, volume. If you think of price as the action on the field, then volume lets you hear the crowd's reaction. It's all about enthusiasm. Think about it like this. Volume is basically the roar of the crowd at a big game. A huge price move with a ton of volume, a louder roar, confirms that, yep, that was a big deal. But a price move in a totally silent stadium? Kind of weird, right? It suggests nobody really cares and there's no conviction. And check this out. This is a perfect example. Look at the price for Black & Decker. In those circled areas, notice how as the price just takes off, the volume bars at the bottom get taller and taller. That's the crowd going wild, confirming this uptrend is the real deal. So, here's the fundamental rule you got to remember. In a healthy trend, it doesn't matter if it's up or down, you want to see volume get bigger on the moves that are in the direction of that trend. It's the market giving a big thumbs up, saying, yeah, we believe in this.
All right, let's open up a case file. Here in the McDonald's chart, the price breaks out of a range. But can you trust it? Well, look down at the bottom. That monster spike in volume tells us there was huge participation, huge urgency on that breakout day. This isn't a fake out, it's a confirmed move.
Okay, but now look at this, because this is a huge red flag. Intel's price is pushing to a new high, which on the surface looks great. But look at the volume. It's actually trending lower. The crowd is getting quieter. This is a classic divergence, and it's basically a warning that the buying pressure is fading and this trend is in big trouble. And you know, this works exactly the same way in a downtrend. In this compact chart, notice how the really big, tall volume bars show up on the days the price falls. But on those little rallies, the bounces back up, the volume just dries up. The crowd only gets loud when the price is dropping, confirming that the sellers are completely in control here. Okay, let's move to our next clue. And this one is super important in futures markets. This is open interest. If volume is the roar of the crowd, then open interest is like counting the total number of players on the field. So this isn't about how many contracts were traded today. It's about how many are still open and active. It's telling us if new money is flowing into a market, which shows fresh conviction, or if money is flowing out as people close up shop.
Now this part can seem a little tricky, but it's really important. Open interest only goes up when a brand new buyer and a brand new seller come together and create a totally new contract. And it only goes down when an old buyer and an old seller both decide to cash out and close their positions. Pretty much every other trade is just a wash. Okay, detective, this is it. Time to put it all together. We've got our price, we've heard the crowd with volume, and we've followed the money with open interest. Let's see how these clues combine to solve the mystery of where the market's headed next.
This table right here, this is your ultimate cheat sheet. The main thing to get is that when price, volume, and open interest are all moving in the same direction, the market is what we call technically strong. So, for example, a rising price, confirmed by rising volume and rising open interest, is about the strongest bullish signal you can get.
Let's see this thing in the wild. In this chart of crude oil, the price is obviously going down. But is the trend strong? You bet it is. Look at the two indicators below. Both open interest and volume are rising. That means, as prices fall, new money is coming in to sell short, and the crowd is getting louder about it. That is a powerful confirmation that this downtrend is strong and probably has more room to run.
Now, for those really tricky cases, every good detective needs an advanced tool. So let's look at one that helps us track the cumulative flow, the big picture, of buying and selling pressure over time, not just day by day.
While those daily volume bars we looked at are useful snapshots, the on-balance volume indicator, or OBV, gives us a continuous storyline. It's awesome because it keeps a running total of all the buying and selling pressure.
The idea behind OBV is actually pretty simple. If the price closes higher for the day, you add that day's entire volume to a running total. If it closes lower, you subtract it. The theory is simple but powerful. The OBV line should move in the same direction as the price. And wow, this chart shows you exactly how powerful it can be. This is a textbook warning sign from Intel. The price pushes up to make a new high, but the OBV line below it fails to do the same. This bearish divergence shows that the volume on the up days just isn't strong enough to push that cumulative total higher. It's an early clue that the trend is weakening, and, well, you can see the price followed it down shortly after.
So let's wrap this up with the key rules for your new investigative toolkit. First, volume confirms the trend. Second, if volume and open interest are going up, the current trend will probably continue. If they're going down, that's a warning that the trend might be ending. And remember this, it's huge. Volume often precedes price. Changes in pressure show up there first. By looking beyond just the simple price chart and learning to interpret the clues hidden in volume and open interest, you can move from just seeing what happened to truly understanding why. You can build a much clearer, more three-dimensional picture of what's really happening in the markets. Case closed.